The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' tune means it's showtime once again. Time for the Option Block, your favorite source for wit and wisdom from the option market, punctuated with occasional moments of pure hilarity and also some outright silliness. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network, and I am joined on the old all-star panel today, starting off with the man holding down the Korean hot seat over there at Options Express. None other than good old Mr. Tim Navabi. Tim, welcome back to the show, sir.
How are you, Mark?
I'm doing good. I'm just excited to be here dispensing wit and wisdom and occasional hilarity to our crew of avid listeners. How about you?
I'm doing pretty good. I'm trying to get over a cold that doesn't seem to want to go away, and just watching the one-way market. So
that cold gives you a nice deep timbre to your voice. It sounds good. I recommend.
Oh, really?
I recommend you go for it on a regular basis. I like it.
Timber.
I'm sure the ladies in our audience appreciate it quite a bit. All right, and that voice you hear yelling timber in the background is none other than Yukon Jack himself, a.k.a. Andrew Giovinazzi of Option Pit fame and also local Maine fame, I'm told. He's quite the man with the lobster pot. How are things going over there, Andrew?
Everything in Maine is going great. I actually did a little logging this weekend because I was out of firewood, so I had to cut some trees down on my land.
Somehow I envision you, for some reason, just participating in one of those lumberjack competitions where they cut their way up the pole with the logs. And were you doing any of that kind of stuff? The high-speed, action-packed
I don't
cutting?
do anything that technically challenging. And actually, people that have known me for a long time are surprised by this newfound ability to cut down trees, because I used to have clerks change my light bulbs in my house when I lived in Chicago. Let's just put it that way. I was not real useful back in the day.
See, you move to Maine and you become a frontiersman.
You have no choice.
Well, once you have that outhouse, once you make that switch, it's kind of hard to go back.
Yes, Maine is the nicest third world country with the best roads. That's what we've got here. Natural beauty to go. Yes,
and before we offend all of our Maine listeners, allow me to introduce the third member of the all-star panel here. He is pinch hitting for one Monday Mike, who is at the doctor with his kids. Good old George Kachuk holding down the old Know Your Options hot seat. Mr. George, welcome back to the show, sir. It has been a while.
Oh, thank you very much. Glad to be here. Always pick up some good option trading tips from you guys, so I'm very happy to be here again.
Hopefully nothing serious with Monday Mike's little guys, just a regular checkup, I'd hope.
Yeah, it was a regular checkup, so it sounded more like a family day. He needed some time off, so he took it.
He's just dodging us. I tell you, these KYO guys, they got to start late, they got to leave early, they got to do this. Starting to get a bit of prima donnas on the old radio show here. I might have to cut them down a few pegs next time I talk to good old, all this radio stardom going straight to their heads. All right. And with the team assembled, we're going to dive right into the trading block.
The trading block.
All right, it is time for the old trading block where we dive into the action that's been lighting up the street today. And as Mr. Navabi alluded to earlier, it was a bit of one-sided action on the old street today, not some of the 10-point vacillation we've been used to seeing over the past couple of weeks. We actually saw a bit of a rally on the old street today, rallying off of the somewhat decent news coming out of Greece that they're taking the first tentative steps towards fixing all of the ailments that have been consuming that country and that part of the world for quite some time now. The S&P closed up 9 handles to 1351. The Dow closed up 73 to 12,874. The NASDAQ closed up an even 1% to 2931. And the good old VIX cash, the mover of the day, down 8.4% or 1.75 points to 19.04. So perhaps we will start there, Andrew, as we are wont to do on the old trading block, with the volatility action. Not usual that you see this big of a drop coming out of a weekend. Usually you see a little bit of a weekend coming back in to offset any sort of a rally. And this wasn't that steep of a rally, but this seems to really, really express some interest out there that these Greek steps are the first steps down the right path. A bit of a sigh of relief, if you will. Is that what you're seeing here from VIX land?
Yeah, I cannot disagree with that at all. We actually saw the VIX spike, the cash spike on Friday about an hour before the close. There was actually a melt up in vol in the VIX. And then it sold off pretty sharply, which everybody freaked out, like the Greeks aren't going to do this. And somehow along the line, I think the Germans and the French just told them this is it. There's no more dilly-whacking around. You got to do it or you're out. Or you guys just, you become a banana republic again.
Hey, you don't mess with the Germans, man. They when they say do something,
they threw it down. They threw down. So anyway, and that actually end of the day, we had a lot of option pit. A lot of our subscribers and clients were looking at that, and actually, there were some fairly good plays to be had on Friday about the last hour. About the last hour of the day. Kind of fading that and thinking, you know what, the Greeks really don't have a choice. They're going to have to do something. So I think this today, and I'm glad that the VIX, we didn't get down to some really low numbers like 18 or something like that. It was sort of a steady decline in it. Everybody's just kind of, okay, we're going to buy it. We're going to buy this rally. And they were doing it kind of slowly instead of that, how we've been basically gapping up 200 points and then it stopped moving. I think this was a steady people getting back in, which I think overall is probably, it's healthier for the bulls anyway.
Yeah, not one of these rockets to the upside or rockets across the board, as it were.
Right. And I needed the VIX to come in for all this stuff to work. So anyway, it did. But very definitely, I think the Greek relief. And there's even like a side thing that we watched, this little funky stock called Dry Ships. It was up 10% today, which is pretty big for a $3 stock. Again, the only thing I can see is people trying to scoop up these little Greek stocks at the bottom, thinking this is some bottom fishing land. So we'll see how that all plays out, but definite relaxing of the sort of the fear premium that's in these things.
Good old Aristotle Onassis returning from the dead to scoop up some cheap Greek stocks. Is that what you're saying?
Which is what he would be doing.
We have Adam Smith over here, and over in the Greek economy they have the invisible hand of Aristotle Onassis moving things around.
Buy them all. I will buy them all.
That is a very dated reference for most of our listeners. That actually goes beyond me. I'm reaching beyond my years as well for that one. But yes, speaking of VIX and positioning for the VIX, I know you guys have been short over there for a while. I'd imagine the bulk of your positioning on short VIX had to be on the long premium side of the fence. I can't imagine you were leaving yourself any serious upside exposure.
No, not really. None.
Just
actually, we closed a lot of it on Thursday.
Really?
Yep, and we just started. We closed it on most of it on Thursday. We left some of the long, like put spread stuff on. We had that and that's what basically why we saw the shock on Friday afternoon, because it was so pronounced. And we just basically at that point, but there were other hedges, like we had some VIX puts, and then a lot of guys had some of that SPX downside puts as well. It's kind of like the funky backspread, and they had been riding both, and it overall it had been working out because they could start letting go some of those downside puts in the SPX, and they kept and they could keep their VIX position on. So, I think it worked out, extremely well. Sometimes back spreads, when things move a lot, hey, they work out. But yes, overall, no, it's not a high enough level to really be short a lot of volatility contracts, I think. So more like the put spreads. So you're exactly right there, Mark. But we were pretty thin going into that little spike on Friday as far as position-wise.
The funky back spreads, they always tend to work out. The funkier, the better, in my opinion.
That's a technical term, too.
Yes, I like that. You put on the funky back spread, then you do stuff.
Exactly. So to do stuff in this, you had to sell some puts on Friday when that stuff went on, went parabolic for about an hour or 20 minutes or something like that. So
I'd imagine a mentoring session with you goes pretty quickly. So yeah, we're going to put on this funky back spread here, and then we do some stuff. And come back and check me at the end of the week, and we'll see what we got here.
Exactly. Hey, Andrew, what's a back spread? Okay. Yeah, you got to buy this thing, and yeah, exactly.
But it's interesting. We had Mark on the Mr. Sebastian on the Vol Views program last week, and he made an interesting comment about that as well. Because at a certain point, you're loading up on all this short VIX of an attempt to squeeze out the last few morsels, the last few droplets before the realized and the implied vol finally tend to coalesce around a single point. So you're striving and doing all this work to squeeze the last few bits of juice out of the VIX there. Meanwhile, there are some potential hiccups lurking on the horizon that could send that bad boy spiraling right back up again. So it is definitely a delicate time to be squeezing that last bit of juice out of the old VIX. You certainly have to position correctly. If you're coming in and riding a ton of upside in VIX or doing anything crazy like that, then you're certainly positioning yourself perhaps incorrectly given the current environment.
Exactly, and that's another thing we stress. You position it. You could be a short delta. All short deltas are not the same, man. Some you can walk away from and trade the next day. The other time, they're hanging you from the flagpole. So very, very, we try to make sure we have people, when they're thinking about the types of deltas, that they're positioning them properly. We don't want anybody getting taken to the hoop. So yeah, that's one thing we work on pretty hard.
That's a good message for our audience. A lot of our listeners fall into the degenerate premium selling side of the equation, and they would see that as a sell or not sell type of opportunity, when indeed it is an opportunity to perhaps go short a different way, the long premium way. That is heresy to many of our listeners, but nonetheless, sometimes it is the most nuanced approach.
And you can walk away.
Yes, exactly. You can sleep at night.
Relatively unscathed.
You can sleep at night. You know what you're outlaying at the beginning of the day. Here we are advocating long premium. I don't know what's happened to this show. We've fallen off a cliff here with all the long premium buys we've been recommending of late. Our listeners will abandon us as they return to their dark side approach. And Mr. T-Nav, you've been silent over there in the OX hot seat. What was lighting up your own personal tape today, sir?
I'm surprised you haven't mentioned it. Come on here. I mean, Apple over 500. Is there anything more to talk about?
Oh, yes. It's become so matter of fact now that it hardly registers on my scale these days. You're right, but good old Apple closed at $502.60, up nearly 2%, or $9.18. And quite frankly, I didn't see what caused the hubbub today. I know last time it was the Nortel patents. That's last week with the Nortel patents, the news I'm seeing here. So I don't know what's.
Today was just another day.
I'm looking here in the news under Apple, and all I see under the news for today is a headline from the Virginia Pilot newspaper that says, "Jobs alienated a lot of people." and the stock off to the races, nearly 10 handles on that news. George, you guys trade in a lot of Apple today. What was causing this move to the upside in Apple today?
Not exactly sure what was causing it, but I think Apple just changed character after its earnings announcements. I mean, it was kind of wedging up. There was no volume behind the move. I know the other guys were still bullish Apple. I was not so much. I was thinking it's kind of ran its course. Had the earnings report. It gapped up and never looked back. It never undercut that low of that earnings. It's what I call a viable gap up at 443 low in Apple and just kept going higher. And now you can say it's got another sort of what you can call the Livermorian century mark, crosses 500. So it should go to 510, 520. It was a Jesse Livermore thing. Once something crosses the 100 even levels, it should continue higher. And if it fails, watch out, But and then the volume that's come into Apple after that earnings gap up, it's just like all of a sudden it's revived, And I think it's just on a valuation basis, it's cheap, It's still dirt cheap.
Yeah, it's hard to say that with a straight face, saying looking at this $503 stock and saying cheap, but on good old Andrew's old man fundamentals, it is a cheap stock. The PE is still there, and you look at the profit. They were making more profit than I believe Google made in revenue last quarter, or some absurd number like that. So they're doing quite well over there in Apple land, despite the fact that Jobs alienated a lot of people. I love
that's how they got to be so good, because Steve Jobs alienated a lot of people.
Yes, yet somehow people love those products, his products. I don't understand how everyone can hate the man and yet love the products. Intriguing. But yes,
I just didn't like it because he did so well. I mean, let's get realistic. He kind of beat all those guys at their own game.
He also
there's a little sour grapeys on that.
I'm sure there's some of that. There's also definitely there's a jerk factor at play there too. I mean, I'm not a big fan of Gates. I don't think anyone could say he's a very personable fellow either. Yet he's devoting the second half of his career to major philanthropic initiatives. Where you have Jobs, the first thing he did when he took over back at Apple was cancel all corporate philanthropic initiatives. They weren't reinstated until after he died, just recently. So here's a company with $100 billion in cash that was doing nothing on any sort of major philanthropic area. That alone is a pretty despicable, I think I would have to say. I understand. I understand the Randian. I understand the Randian philosophy behind it, that you should just devote all of your efforts to maximizing that bottom line, and altruism's evil and all those sorts of things like that. But I still think that's an interesting take from that guy who supposedly was such an enlightened Buddhist fellow and hippie nonetheless. It certainly seems that when the money came to bear, that those attributes fell by the wayside. But George, as the dedicated underlying man over there at KYO, I know the Mike Squared, let's call them, have been debating whether or not to hold Apple outright now and just go naked to the upside, or continue rolling and writing calls, because they've been on this call writing and rolling spree for quite a while. In fact, you mentioned it, since earnings, the stock is up over 10%. So it's just been a roll to the upside. So what's the current status of the KYO Apple holdings? Are you purely naked to the upside now, or have you mitigated that somewhat? Or what's the plan here?
I honestly don't know what they're doing. From my side, I would be naked to the upside, meaning it's changed, and it's getting back to the theme we talked about. If you're a fund manager, and that's really what's driving all these high priced stocks, you can never, at this point, you can't be like held as, you did something bad or crazy if you bought Apple. He's like, they can just make their money to hold it the rest of the year. Well, we bought Apple. No matter what happens, you're like safe. You're in the safe zone because it's Apple.
Yeah, it's definitely hard to get your board of trustees and advisors up in arms by loading up on Apple. Certainly is the stock of the day. So, Tim, you were saying this pretty much consumed most of your day, calls on Apple again?
Yeah, some, not a lot. Apple, people were looking at the euro. People were also looking at crude oil. Those are probably some of our most actives.
And we do have a few earnings coming out after the bell. Of course, nothing really earth-shaking. Live person, ticker symbol LPSN. They close at 1260, and they're trading pretty much around that in the after hours. So not a heck of a lot there. And then an odd block candidate, actually, that we're going to be discussing in a few minutes, but we'll give you a little bit of a tease now. Seattle Genetics, ticker symbol SGEN, closed at nearly $19 today, up about 2% in the after hours. They are now trading 17.5, so trading off a little bit there in SGEN. And I think with that, we're going to close out the old trading block and roll right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that funky Bond-esque theme, I suppose you could call it, means it's time yet again for the Odd Block, the portion of the show where we discuss the interesting and or the unusual options activity that's lighting up the tape today. And we're going to kick things off with an Odd Block newcomer, ticker symbol NTAP, that is Network Appliance Inc. They closed today at $38.98, down nearly 2% or 70 cents on the day. And this is the name that typically does about, on a good day, 17,000 contracts. They did over 80,000 contracts today. So very, very sizable options activity lighting up the old tape ahead of NTAP's earnings, which are on the 15th after the close. This is a supplier of enterprise storage and data management products. And what we saw today, actually a theme for the Odd Block today, is a lot of put buying, a lot of bears come into play today in the old Odd Block. And we saw that certainly in NetApp. We saw a lot of debit put spreads lighting up the tape here in the front month primarily. A lot of this was driven by the fact that the analysts were at work today in NTAP. The guys over at Think Equity cut their price target. They cut it from buy to hold, and they cut their price target down to $42 from $54. So needless to say, that definitely weighed on the stock a little bit. And we saw some players coming in to take advantage of that and or to position ahead of earnings on some continued downside. The biggest trade of the day was the Feb 34.39 put spread that went up about 9,000 times on the day, and it looks like a total actually went up more throughout the day because these strikes closed with nearly 18,000 on these strikes, so it could have been even double that by the end of the day here. We have this write-up from the afternoon sessions. Looks like more contracts went up later on in the session, but the bulk of those spreads netted out for about $1.72, of course, with where the stock closed today, almost exactly at 39. That is now an ATM put spread. So these traders betting that NTAP has some more downside, some serious downside ahead of it going into earnings coming up in a couple of days. So interesting to see if these are just long holders of equity who are looking to hedge their exposure, or if this is some outright specs going on here in good old NTAP. And before I move on to the next Odd Block candidate, any of you guys, George or Andrew, any of you guys playing around in the enterprise storage and data management sector these days?
Not that sector exactly. I mean, we do have some of the cloud plays on, like Rackspace. We're looking at F5 networks, and we're considering VMware, but NTAP has not been on our radar because it's just so so beaten up and lagging the market.
Speaking of
the
Rackspace,
other ones aren't really data storage ones, but again, it's kind of the whole cloud idea.
Well, speaking of the cloud and Rackspace, I had those on my calendar, but I wasn't going to mention them. But they have earnings today after the close as well. And looks like things are looking pretty well for Rackspace, and I'm supposing for you as well then, George, because I'd imagine you guys are long racks. They closed today.
Yeah, we are, and so that's a nice, you're always playing earnings roulette, so you're like relieved when you see it come out and, it trades up a little afterwards.
Exactly. It closed at 49.25 roughly today, and they're trading in the after hours at 51.5, so a nice $2 or so move there to the upside. And looks like it's going up even more, trading up at 51.90 now, so some upside there in the old Rackspace hosting market. So interesting activity going on in this sector. And next up on the old Odd Block, we have Live Nation Entertainment, Inc., ticker symbol LYV, closed today at $10.84, up about 12 cents on the day. This is the name that does a whopping 350 contracts a day, and they did 14,000 14,000 today. And the bulk of that activity, about 12,000 of those 14,000 contracts was in the April 10 puts. We saw, just like the same story we saw there in NTAP, spread over into LYV today, with bears coming in en masse to load up on the downside or the dark side here in LYV. We saw about 12,000 of the April 10 puts going up today. The bulk of those buys, including a huge block of nearly 10,000 contracts for about 70 cents each. These are going up ahead of earnings. Of course, earnings are not for a while. Earnings are not till the 23rd. These April contracts are not a particular earnings play here. We did also see some people looking maybe to spread that off. We saw about 1,200 of the March 10 puts going up. So some people legging into some time spreads there and maybe taking advantage of some of the earnings vol in March to sell some of that. But for the most part, it was the April 10s were the story of the day there in LYV. This is the strike that had about 150 contracts open interest coming into today. So all opening paper here in LYV. And then we're going to close it up with the name we mentioned earlier, good old Seattle Genetics, ticker symbol SGEN, SGEN. And they are, of course, a biotechnology firm, and they had earnings after the close, and, of course, they're still trading about 17.5 or so in the after hours. So a wee bit to the south in the after hours for SGEN. And this is the name that continues our story, I should say, of bears popping in ahead of earnings. We saw front month puts lighting up the tape today in SGEN. This is the name that does about 1,000 contracts or so a day. We saw nearly 4,000 going up today. The bulk of those, 2,500 or so, in the Feb 20 puts. We saw about, most of those changing hands with for about $1.60 a contract. The bulk of those were buys. We did see one trade, though, going up exactly mid-market. 1,250 of them going up mid-market for $1.60. So that's one of those questions where you don't know exactly if it's going up for a buy or a sell here. But in general, it looks like the bulk of that activity today was opening buyers of the Feb 20 puts. Probably, again, either another underlying hedger or someone outright speccing ahead of earnings. And given what we're seeing so far in the after hours, it appears that these guys were on the right end of that fence. SGEN trading down substantially in the after hours here today. All right, then. That is going to do it for the old on block. And now we're going to roll right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' reprise of the old title theme means it's time for the Xpress Block, the portion of the show where Mr. T-Nav and his compatriots over there at OX take the reins from me, and I sit back and sip a nice frosty beverage. Of course, Mr. T-Nav, a little birdie, told me that we're going to be discussing today in the old Xpress Block short commissions, particularly how to qualify for and or access those short commissions. When we're talking about, John Griegus News on the show last week mentioned the fact that OX charges a reduced commission rate to come in and close out your shorts, especially the penny names on the buy to close type orders. And I know we've received some questions on this in the past. I've seen it on the email. I've seen some pop up in our forums about what orders qualify for this. And so today, actually, when I was closing out some positions, I had some positions to close out in the weeklies in our OX account. So I paid special attention to see exactly what was going on in those accounts when I put them through. And I used the Extend platform to place the orders, and what I saw was interesting. I placed them essentially buy to closes in 2 weekly names that were trading around $12 each, so almost identical from a premium perspective. And these were both penny options that we were short, that we were buying to close out. So we were working penny bids in both of them, and we saw one of them was a 10 lot, and it came back with an estimated commission of $15, I believe, and then the other one was a 20 lot that came back with an estimated commission of $10. And I found that intriguing and also confusing, and I'd imagine a lot of our listeners would do the same. And since then, you and I have discussed exactly what goes into that estimated commissions number. And I think it might be a good thing to explain that a bit, as well as how your pricing works for buying back to close some of these short options that may have gone your way.
Sure. Yeah, I mean, I think it's a real good subject. I talk about it a lot on expiration day or coming up to expiration day. And there's a couple key points I kind of want to bring up that I usually bring up on the phone to the customer. And after I do, they start to say, oh, okay, now I get it. First of all, on the action part of it, okay, we're talking about buying to close only. So it's not sell to close, but essentially it's buy to close. So we'll give you a reduced commission rate on these buy to close when the options are, when your order is filled for less than a nickel. If it's not obvious, and it's okay if it's not, but essentially, why do we do this? Well, we're offering for you to reduce your risk, really. So, I mean, that's the primary reason. So why not? Go ahead. Buy to close these options. They're real cheap. Reduce your risk. We'll give you a reduced rate. The rate specifically, okay, it's, if you're buying 1 through 10 options back, you're just going to be spending $4.95 flat. If your order is for more than 10 contracts, essentially you're going to be spending 50 cents a contract. So these are on buy to close, orders only, and if the option is priced for less than a nickel, will you get that reduced rate? So not a nickel, but less than a nickel, 4 cents to, penny to 4 cents. Now, a lot of questions come up where, individuals, I think this was your situation today, Mark, where you'll enter an order to pay 3 cents and you won't see that it's giving you the reduced rate. Well, it won't be showing you the reduced rate if the quote is still over a nickel. But once the order gets filled at less than a nickel, you're going to be getting that reduced rate.
Yeah, I think that's the interesting conundrum for a lot of people. They think that the commission is calculated at their perceived execution point. So where they want the trade to take place, that's where the commission will be calculated. But actually what the algo is doing is seeing where these options are trading right now. I think in the case of one of the ones I mentioned, I believe it might have been the 10 lot, they actually were trading a nickel or more. So it obviously was looking at that premium level and saying, okay, these don't qualify yet. So it's interesting, even though you're working a limit, it's pricing the estimated commissions off where it is trading right now. So listeners definitely need to keep that in mind if they're seeing some weird numbers being kicked back at them for their estimated commissions when they're looking to close out. And I know that's becoming a more frequent scenario with the weeklies now, where every week is weekly expiration. Everyone's looking to close out on a much more regular basis, I'd imagine, over there at OX.
Yeah. But, the other thing to remember, too, is that these are on penny options only, and that's primarily, the big names, SPY, Apple, IWM, things like that. Not every single option is a penny option. So, if you can't put in the order for 3 cents, it's not going to qualify.
Yeah, these are for trades where you're taking risk off the table primarily. You're not looking to, you're taking a winner that has gone your way usually, and you're taking it off the table for a penny or a couple of cents. And that makes sense to incentivize that sort of behavior. It doesn't make sense to incentivize if I'm out there slinging 100 Delta calls for you guys to incentivize me to do that. But if I'm taking winners off the table and I'm just taking risk off the table, it makes a lot of sense to incentivize that type of behavior. It's good behavior all around.
Yeah. Yeah, I mean, I think it's a good thing. I mean, exactly. That's kind of how I started. We're asking you, hey, would you want to reduce some of your risk? We'll make it cheap. Not a bad deal if you ask me.
Indeed. Anything else going on over in the land of OX, Mr. T-Nav, you'd like to let our listeners know about, or what was particularly caught your eye today?
Just like I mentioned earlier, things that are active, Apple, GLD is pretty active. SLV, PCLN was pretty active. That was a big mover today. The euro, crude oil. So that's pretty much what's active. And not too much else. I mean, as long as you're buying these dips, you're doing all right?
Exactly. Or just buy Apple. Why do we even need to have this show anymore to discuss various strategies? There's one strategy and one strategy only. Either you buy the underlying in Apple, or perhaps even better, you buy volatility these days in Apple. Vol has come up a little bit, but it's still relatively cheap, and it's a good time to get long premium out there. So by all means, just buy Apple and go home. We don't need to talk about all these other nuanced 1x3s and ratio spreads and time spreads, or as Andrew likes to say, talking about doing stuff. No. Just buy the Apple and go home. We'll call it the Apple Show from now on.
I like doing stuff. I know this is the Option Express block, but I like doing stuff easy too. Just buy stuff and boom, and they go up. So that's okay too. I'm all for that.
All right, and that is going to do it for the old Express block, and now we're going to roll right into Around the Block.
Around the Block.
All right, and those car horns mean not only that there is gridlock here in downtown Chicago, something you don't have to worry about out there in the hinterlands of Maine, Andrew.
There is no gridlock here.
Yes, that's true. Just when the cows stream across the street sometimes and break the fence.
Just the lobsters jumping into the ponds. That's it.
Exactly.
That's the gridlock.
Exactly.
The speed I can handle now.
Not only is there gridlock in downtown Chicago, as usual, but there's also, it's time for Around the Block, the portion of the show where we discuss what is coming up, what we're watching on our trading screens. And George, since you're you haven't been on in a while, maybe I'll give you a chance to go first. What are you watching from an underlying perspective these days? What's on your horizon? It's earnings season still, so I know Apple is taking up a lot of your time, but aside from Apple, what else is really catching your fancy out there these days?
Well, another stock that we're holding, but again, we're going to hold through earnings tomorrow morning, Michael Kors reports, and that's a recent IPO. Had a short little consolidation after it came out and pretty much rocketed it up. And that's a dangerous hold because when they came public, it's all the holders of the company just sold out their shares. The money didn't come back in the company. But despite that, the stock's basically, from a buy point of what I see is about $25, is up to $33. I think it was hit $35 today.
And what's the ticker on that one again?
KORS.
KORS.
Yeah, it's Michael Kors. Your wife probably knows about the company. I'm sure all women do.
I don't play as much in the jewelry sector, perhaps as my wife might like.
He's the dude on with Heidi Klum on the Project Runway. I've seen that. That's why he's so big now. You gotta buy that stuff.
So I see you do get reality TV out there in the hinterlands of Maine, at least.
We get one channel.
So like that, and then this week Zynga is one that kind of caught off guard when that Facebook news came out. That sort of rocketed past about $11.50 buy point, and it's a little bit extended. So I'm hoping for it to come in, but you're going to see a lot of it moving around. On I think earnings are Thursday, or is it tomorrow?
Earnings are the 14th. They are tomorrow after the close. Oh. Yes, I like that. Extended. That's a very favorable, charitable way even to put it. It's extended.
Yeah, so you kind of can't touch it here, but it's like it could be a very important company to own sometime. So I'm kind of just looking at every day. Is it going to offer some point of entry, So we're watching that. And then just some of the other...
Before you move on real quick on the Zynga front, we talked about them extensively last week, and this wave of love that swept across the sort of Web 2.0 sector, I suppose you can call it, or the social sector, in the wake of the IPO announcement of Facebook. Not even the IPO, but the IPO announcement. That was all it took to send all of these stocks off to the races. This one, we talked about Ren on the show in the past. Of course, a lot of them have since given up the ghost. First off, how do you feel about this wave of love spreading through the sector in the wake of Facebook? You think it's merited at all, or is it just a lot of hyperbolic nonsense? And then B, do you think something like Zynga is poised for a pullback here, or what's your take?
Well, I think it's in a very important sector that you can't discount. Every sort of seems like market cycle, there's got to be something new, and I think the social media is something new. Now, is it worthwhile dollar-wise? That's always, you never know until after it happens. But it's a very important sector to look at. So I think of Zynga, LinkedIn, and of course Facebook, if it comes out, Groupon. And so Zynga has earnings. They're making money, and it's going to be it's that kind of thing where, again, I always look at the money in the market's driven by the fund managers, and it's going to be their theme. Hey, what's the big new theme? And this could be it, the social networking thing. And then you had LinkedIn that reported earnings last week, and they had a really nice pop off of that. They gave back a little bit today, but even prior to those earnings, along its bottoms, it looks like it had a lot of buying interest going on there.
The KYO boys starting to dive back into LNKD. I know that was Uncle Mike's favorite pick back on our live show. I think actually it was back in July. He was big on LinkedIn. He was working the 97 level. I believe he was shorting some puts there. Then he kind of backtracked on that afterwards and gave up on LinkedIn. But is it time for you guys to get back into LNKD?
Well, we're not in it, but it's sort of on the radar. And probably the reason we're not in it is because it has kind of lagged the market, and it just kind of like you said with the Facebook news, it's coming IPO kind of started to drive these stocks up. So again, it's just kind of come up on the radar, but we just haven't acted on it, And with the Zynga, it just kind of just rocketed up. So, I'm waiting to see maybe if it touches its 10-day moving average or it gets a bounce off of there, that might be playable there. And that's not too far away. So, but of course, earnings comes into play. So it's all kind of a lot of different factors, contextual. I can't answer that, but the answer is do not ignore this sector at all. I don't think, it might not happen right away, but it's something that should be looked at.
So George's warning to all of you out there then is to ignore the social media, aka Web 2.0 space, at your peril. Of course, it's like Rackspace is actually the place to be these days. Is dive into Rackspace. Forget these fly-by-night social media companies like Zynga and go somewhere people actually are making money. Interesting. What else is on your radar there, George?
Well, some of the other ones, the biotech ones, we're looking to possibly add into Biogen IDEC. That's BIIB, Celgene. We're still liking that. Jazz Pharmaceuticals. Now we're just sitting tight on these, but we're looking to add on to these. With the whole idea is this market's had a great move, 5 weeks up in a row, and then Friday we got a little pause. There wasn't any big volume selling, and this week, of course, today's day, the volume didn't come in too high. So basically, we're not too excited about today, but generally looking to just kind of continue to add into the few stocks that are working, the leaders. Those are the things we're looking at. Out of the energy sector, Concho Resources, CXO, we still like that. Another one, the tech space, kind of related to Rax, is Solar Winds, and it's not a energy company by any means. It's a software company, and they're doing something different. That's a dangerous name to have today for a software company, getting lumped into all those disastrous solar companies. It's funny because I've kind of had that slant at it. I'm like, I should have a closer look at it because it's been doing quite well, corrected, and then had another big move to the upside, reversed one day before the earnings, and earnings came out, and then it blasted higher. That's SWI. But they have nothing to do with solar energy or power. It's funny, they got both names, solar and winds. But they're a software company, and I guess they claim that where they're saving all their money is they don't have any reps that go out to meet their clients. It's all web-based. Your IT guys actually get on the internet and troubleshoot their problems right on the internet off their software. And so they're coming in with very good earnings and forward projections. So we do like them. Nuance, we had Nuance on the board for a little while, and they missed on earnings. So that took a huge hit. And so we're basically reduced our positions. We still have a little small position in that because the story was that they're just going to defer some of their earnings till next quarter. Never a very healthy sign, but we have a very modest small position in that. Monster Beverage Drink, that's another company we like. That's the old Hanson's Natural Soda. They had a multi-year run. Looks like it's breaking out, moving again. So we do like that one as well.
It's funny. Whenever you say Monster, I always think first of those ridiculously overpriced cables that you see, and every time you walk into Best Buy selling you an HDMI cable for $37, $50, something absurd like that. So they have decent premiums built in. They're probably doing all right. I'm not sure about Monster Beverage. I haven't watched them in a while. But of course, hey, those are also pretty prevalent in all the stores these days, and not a bad markup on a can of energy drink, I'd imagine.
Yeah. So, and that one's a little scary because, your former leaders never truly become your next year leaders. That's sort of the theme I was thinking. But then again, you got Apple, Priceline, ISRG, Monster. These are like stocks that led previously, and now they're the ones that are, coming into new highs again. So can't ignore them.
Well, thank you for that, George. And now, Mr. Maine, aside from catching all those wild lobsters and throwing them into the old pot, what else is on your horizon? What's keeping you busy? What's keeping you awake at night even over there in the hinterlands of Maine?
Well, not much keeps you awake. It's so quiet here. It's very quiet in Maine. So
Plus, you're just doing nothing but buying premium these days. You tend to sleep pretty well when you do that.
Basically, I'm looking for excuses to get long, but I just don't want to spend any money. We touched on it last week, and I like
the dream of all options traders to get long for free.
Exactly. It is really, but I think that's really kind of the right type of trade shape now, and just have that downside minimized to a manageable level. And of course, you love the iron butterfly, and that naturally is a position that you make some money in. And we're still seeing a lot of these implied volatilities over the I was just looking at Monster as he pulled it up, and that premium is getting a little bit frothy for a name that big, for a soda pop company or whatever it is. But it's still I don't see quite a trade in there yet. But it looks like it has had a huge run. But some of these trade types of selling, you sell out the money straddles, you buy these strangles, you're looking for some dough, and you use some of that theta to buy upside calls. And with the markets, really, when it's been backing off, it hasn't been backing off huge. I don't think that's a bad 6 week out type of play on some of these stocks. And that's, if we've been doing that in a couple places. Just small stocks. I've tried to avoid the really huge names, and it seems to be working out okay. And we just, obviously when the market rallies a little bit like this, it sure doesn't hurt. But that's an idea for stocks where really you're looking at that underlying volatility is not doing much, but the stock is kind of directional. And actually, it would fit something like Monster. But the earnings would, right through earnings would be a tougher play. But it has a trade shape like that.
It's funny you mentioned the old iron fly, because I actually was unwinding one of those today, a broken wing one, if you will. That's part of what I was doing in that OX account today when I was looking at all those various commissions. We were unwinding a short broken wing, broken leg, however you want to call it, iron fly we had on Activision. We were short the 12s straddle and long the upside going through earnings in case there was a bit of a pop to the upside, and it worked out fairly well. We were just taking that off today, as well as we were pretty heavily overwritten on Ford. We were taking that off today too, and just planning what was next for us on the old earnings horizon. And Monster is an intriguing one. I don't delve into the premium beverage end of the spectrum perhaps as much as I ought, so perhaps an interesting one to look at. But I agree with you, it is a wee bit frothy. That straddle is still trading $2-3 with a few days to go, so about a week to go. It's interesting.
Yeah, that's a trade, I think, when there's some gamma 2 weeks in. I don't know. I like having a little more. I have a little more time to let either the theta have time to work, the decay, or to have the deltas work. Gamma, selling the gamma is a little tougher one for me when you're just really when you go 2 weeks in, especially on a name that big.
Yeah, I wouldn't be a fan of taking that position either way, really, right now. I don't want to load up on a almost $3 straddle with a week to go, nor do I want to short this premium, even if I flied it off or iron flied it off. It still wouldn't be too attractive to me. Speaking of which, it actually brings up a good point, a big point, Andrew, before we move on. I was talking to someone the other day. We were talking about modeling weekly options and which is the best model, and all the inherent problems that go along with decay that we used to see all the time on a regular expiration cycle, where the final week your gamma and theta numbers were just garbage. And we've seen a lot of improvements on that on the last few years, especially to handle all these weekly options we're seeing now, where otherwise your gamma and decay numbers are just nonsense. And so I'm curious if you guys over at Option Pit have found anything that you particularly like, because they were asking for some specific recommendations. And I was kind of hemming and hawing, going back and forth on what I thought was the best way to incorporate these weeklies into your software, your model. What do you guys tend to prefer over there?
Well, I think as far as modeling goes, we've been using the modeling from LiveVol Pro. Works out okay, but I think overall, I think all that stuff comes off the initial The initial values seem always to be a little high. That's why I think people like selling them, because nobody's quite figured out how to price the out-of-the-gate option like that with a week to go. And the model, I think basically all real option models, at least in my experience, failed during expiration week. They were never designed to price something with a week to go. I mean, they do, and and they have a sense of accuracy, but I just don't think the model holds up particularly well there. It's more of a question of managing your position and getting an idea of a real risk reward of that theta versus gamma.
Yeah,
you got to kind of play that, and unfortunately, I don't think there's a great way to do that.
Yeah, that was the impression I had, really, is that, my experience certainly has been that most models still break down in the final week of expiration, and certainly that's the case with weeklies. And I was talking to someone specifically who was looking to scalp his gamma in the weeklies, and I was trying to think of a way that you could do that accurately, and it's a difficult proposition. You really have to like you said, more rely upon the net premiums and probably use other options to scalp it, rather than, unless you want to take a general estimate of your underlying and then use that to scalp. But it was an intriguing question, and one I had to mull over for a while.
Right. As far as I know, that Mark and I we are doing some things that are still under the covers a little bit, but we are actively going out and looking at better models and things like that for our clients, because we've had the similar requests. We just haven't come up with a real solution to that yet. Besides kind of like the standard, like the micro hedges and the stuff like that, that's kind of off the shelf that you can get. And those type of things worked fine, while I had them, but that's not exactly accessible stuff for most retail. And I don't think there's really much good for retail, maybe except for LiveVol Pro stuff is okay. It just doesn't have, without being able to really, you need good programs that are reliable and you're used to them as you set the theoreticals. I think part of it too is you have to be able to find something that you can set your own theoretical values for, and then you really have to watch how the thing works. I mean, one thing about using models that we tell people in Option Pit is if you use a model, stick with one and get used to how it works, especially as things roll toward expiration. If you start changing stuff around, your head's going to get all confused. So kind of just finding ways to value options that are consistent, I think is very important. And you also want to see how that model's acting and behaving and how accurate really it is the way you trade it. So, I think the first thing I would tell them is you got to find, that's why I would suggest like a micro hedge or something like that, where you can input values and start to get a feel of how those things work. I guess micro hedge is now Valdi Analytics.
Yes, now Valdi, and
I know,
they are making.
3 years ago they did that. It dates myself.
Yeah, they just did it last year, and I still call it micro hedge. Everyone does. I was talking to the SunGuard guys the other day, and they say a lot of people still call it micro hedge because that's the brand everybody knows. Everyone certainly knows it from the floor, like I did.
But exactly. Anybody that's traded from any time in the last 10 years knows what micro hedge is.
Yeah, I have to admit that wasn't probably their greatest branding move, is getting rid of that name and substituting some generic nonsense corporate term that no one really knows or remembers. But that aside, they are coming out with some retail-oriented stuff that may help along with that. And you're right, I was kind of struck with the same problem where, short of recommending someone going out there and picking up full-on old-school Valdi / micro hedge and adjusting their own SKUs accordingly, that's a tall order to ask for a lot of people, even someone who's sophisticated enough to scalp their gamma.
You guys also should try the stuff from ORATS, Option Research and Trading. That's another group we're looking into. That's actually a former floor trader that owns that company. I actually used to trade with the guy. So if you're looking for different, they have a lot of different types of modeling solutions. It would be worth looking at them. That actually is accessible for retail. I mean, we're talking, if anybody cares about scalping gamma, I think they're kind of at, they're not the one trade a month type.
Yeah, they're a few steps beyond.
Right. We're trading a couple hundred contracts a day, something like that. And
I don't know if they're vol skew yet, but they're or setting their own theoreticals, but they're getting there.
Right, but it's worth it at that level for you to really start understanding where these things are trading. And I don't mean just, it's fine if everybody has their directional piece, that's good, but you really should understand where the volatility of these options are. If you're gonna play this game, that's half the game. So you should get some decent modeling software or some decent theoreticals that are at least consistent, and just stay with them. So
exactly, and
that's what I would say there.
Yeah, I think it's an interesting topic to bring up there. I just happened to think of it while you were discussing that. And I thought since you guys are such degenerate gamma scalpers over there, you must have encountered this of late, particularly with a lot of your clients who are active in the weeklies. So it seemed like a good topic for discussion. Maybe one we'll revisit down the road as the weeklies grow.
People just sell the weeklies.
Yeah, that's true. They don't scalp anything. They just sell them and come back in a week.
The thing too is a lot of what we do is if you're buying back month anyway, the weeklies are kind of, for the most part, you have to give up some edge to sell them. But I mean, when we talk about it, we're almost always selling the darn things and just reducing our exposure by doing that. So yeah, it hasn't really come up.
It's a funky backspread. Ironically, the only people who are really getting along these things and maybe using them to scalp are the futures options guys. They're overwhelmingly long the weeklies as opposed to the equity and index guys who are just selling the hell out of them. So it's a very interesting and completely disparate use case that's cropped up on that side of the fence versus the equity side where everyone's just races to sell and then go away.
Right.
All right.
Well, we haven't had the explosive upside gamma yet either. I mean, we've had a market for the most part. We're in the same place now as we were about a year ago. I mean, we did have the crazy fall, but we really haven't had any of that one directional, that really crazy type upside market. So anyway, that'll be, I'll leave it at that. On we go.
Didn't mean to hijack the whole segment with that, but it was an interesting topic. I think definitely one worthy of exploring again in a future episode. And before we close out the old Around the Block segment, Mr. Tim, Mr. T-Nav, what are you looking at on your screens and what has caught your eye for the coming few sessions?
Looks like we have some good news here coming up. I mean, Tuesday, tomorrow, we've got some retail sales. It'll be interesting on Wednesday. There's the FOMC minutes. I mean, there was very little bit of talk I heard, about, with all the good employment numbers, what the Fed was thinking. So that'll be interesting. And then Thursday, we've got PPI and Friday CPI.
Yes, it still is. There are actually some numbers, believe it or not, that are worth watching. And, of course, good old FOMCA. Gotta love the FOMCA. And, of course, there are some other earnings coming out this week. We did mention Zynga tomorrow. Kind of appropriate that it's on Valentine's Day, I suppose, given that it started off on Facebook and so many ladies love the Farm Bill. And then you have GM on the 16th, Marriott and NVIDIA and Tesla all on the 15th as well. I know Grigas used to be a hardcore premium seller in Tesla. I think he's backed away from that somewhat these days. But he used to love that downside skew in Tesla. That was an attractive target for him. Tesla, an interesting one to watch as well, as they're coming out with all sorts of new vehicles these days and really mixing it up in the automobile space. So you got GM and Tesla. We had Ford last week or a couple weeks ago. So yeah, good times to be an option trader in the old automotive sector. All right, I think that is going to do it. We ran a little bit long on that discussion of weeklies and gamma, but an interesting discussion to have nonetheless. So we're going to close out this Around the Block segment and also this episode of the Option Block. I want to thank all of my cohorts here, my partners in crime, for joining me on the show today, and starting off with you, the pinch hitter, Mr. George Kachuk of Know Your Options fame. What is coming up over there in the land of KYO that may interest our listeners?
Well, I just want to let the listeners know that they can go to our website, Know Your Options Inc. And what we started doing here, we're doing it now for 2 months, is we put up a weekly blog. And what we do is we give you the general market outlook, the way we see it. We give you the technical view. We annotate some charts on there. We'll give you the fundamental view. And then with each issue, every week we'll have anywhere from 2 to 6 stocks, again, giving you the fundamental and the technical view with some annotated charts. So any of the things we mentioned today, you can flip through a few issues and you'll probably find those stocks there. And, I marked up some charts just telling you why we like the stock and things like that. And if you go last week's issue, actually we went through about 30 stocks, just letting you know these were all the stocks we ever mentioned, where we view them in the cycle, meaning buyable or forget about it or too extended. So that's it. Know Your Options Inc.
Yeah, I've been getting your newsletter for a while now, George. A lot of interesting stuff going on there over at KYO, both in your newsletter. I recommend everyone sign up for that, as well as on the website. You guys are becoming quite a little content destination yourselves these days. So a lot of fun stuff to go check out over at Know Your Options Inc. Don't forget the Inc.com. KnowYourOptions.com, I believe, takes you to a student loan site or something along those lines. All right, and Mr. Giovinazzi, what is coming up in the land of Option Pit? I believe you have the big clam bake and lobster roll party coming up in a couple of weeks. Is that correct?
Yeah, exactly. We have our monthly free webinar given by Option Pit. Mark and I. We will be discussing trading around the earnings cycle using options. This is a pretty good event for people that want to look for alternative strategies or basically ways to diagnose the pre-earnings juice. And actually, we have a couple of nice little tricks there for trading options prior to earnings. So I think this is it's a good webinar for people, and it also gives you sort of the red flag when maybe you should sort of pass on some stuff that you're seeing. So that is this Wednesday at 7 p.m. And we started our gold course, and we're rolling along nicely.
Glad to hear things are rolling along over in the land of the pits. And last but not least, Mr. T-Knob, what is coming up over in OX that may catch the fancy of our listeners?
March 10th, we have a free workshop in Indianapolis from 8 a.m. to 3:30.
Sunny, tropical Minneapolis. Get it while it's hot there. Mm-hmm. You have all these nice, sunny, warm destinations, usually during the winter, and then good old Minneapolis. But hey, people up north, they can't be neglected when it comes to options education. Certainly they need their love, too, from the boys over. Can't all be Austin and Florida and all the other fun stuff during the winter. All right, and of course, if you want to hear more about any of the topics we discuss on the show today, such as the unusual activity, or some of the trading elements, or all the options news, or all the other fun stuff that we hit upon, and much more, then surf on over to theoptionsinsider.com and check out all the interesting information we have there for you. Everything from breaking news to analysis to unusual activity alerts to, of course, this program and many more on the old Options Insider Radio Network. And before we go, I want to thank all of you out there for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.